Welcome to the Microfinance Podcast, bringing microfinance to your screen. The Microfinance Podcast is produced by MicroSave, market-led solutions for financial services, and is brought to you by Moving Planet Films.
Biashara Imara is a microcredit program aimed at small and micro enterprises in Kenya. It's highly standardized, which allowed Equity to roll it out across its branch network very rapidly. Maybe most importantly fits well with Equity's brand image and its culture as the Kenyan bank, the preferred bank for ordinary Kenyans. When you see advertising for Equity, it says we care because we're Kenyan. And it makes a lot of sense for Equity to have a microcredit loan product which is available to a large slice of its customer base.
In terms of microcredit, Equity offers credit to its customers, especially the small and micro customers, entrepreneurs who have small businesses. We have one product called Biashara Imara, and that's the product that we're using to ensure that we satisfy a certain gap that has been there in the market to our microcredit customers or to the small business people. And this product basically is to enable them access credit without using the conventional collateral like the title deeds, like the car logbooks, but we are able to use their household assets and the business assets. More of it is basically on how well the business is performing, not mainly on the collateral side of it.
Biashara Imara was developed specifically for shopkeepers, small business owners, market traders, and artisans. Some of them have fixed premises, and some of them sell in marketplaces. Most banks target the microcredit and small and medium-scale lending to establish businesses with a track record of using financial services. Biashara Imara is unique in that it is designed to grow with the business, and as the enterprise develops, the owner is able to move to larger products in the bank, such as SME and corporate loans.
Biashara Imara is very similar to other successful microcredit programs in other countries. It's the Kenyan adaptation of that, and Equity is the pioneer of this in many ways in Kenya. It's an individual loan product. It's cash flow based, so it doesn't require any collateral. The loan officer is responsible for it from inception to repayment, which is very similar to microcredit programs. It's high touch in that way, so there's a lot of personal contact between the loan officer and the customer, which isn't always the case with other loan products. But Equity has figured out how to make this work inside of their own bank, which involved some adaptations for the ways that they did business. For example, the incentive program for loan officers, the management information system that Equity had needed to be customized for this kind of product. So Equity's figured out how to do this right for them and for their customers, and it's been a huge success for them. Equity has over 200,000 microloans now, which makes it the fourth largest microlender, at least amongst the 250 African microfinance institutions which are reporting to the mix, which is kind of the Bloomberg of microfinance.